What's up, you guys? Thanks for joining me on another episode of Data on Deck. Today I want to dive into two different hypothetical investors to see who had the largest returns. One investor buys the market at the beginning of every day and they sell at the very end. So they only own the S&P 500 during the day, during trading hours, which is 9:30 a.m. to 4 p.m. Eastern time. And they never want to go into a night or a weekend holding the S&P 500. So they own it only during the day from 1993 to current. And they do that every day. That's investor number one. Investor number two does the complete opposite. They buy at the close of every day and they sell at the immediate open the next day. So they only own something during times when very little people are trading in the aftermarket. That's in the evenings and on weekends. Who do you think had better performance? Let's take a look at the chart. All right, so taking a look at the chart here, it might surprise you, but the person who owned during regular business hours was here in the red. Almost 20 years of investing, and it was flat. But the person who owned during the market close, bought at the end of every day, sold at the end of the open, only owned during closed market hours, look at their returns since 1993. Almost 600% versus flat. So what that's showing us is that we want to go into the close owning the market or owning a portfolio. Don't be afraid to sell out at the end of the day or at the end of the week. You want to own it into the next day because a lot of times the market will close and it just opens higher the next day. And there's no opportunity for you to be day trading that. And likewise, this is why it's very unprofitable to be a day trader. If you're going to end every day in cash and you're going to start the next day trading, look at what you're working with in terms of day trading. You're working with very low returns. Because if the market opens up, it usually stays there, and if the market opens lower, it usually stays there as well. There's very little opportunity for you to make money day trading during the day, at least with the S&P data. So the best strategy would be to buy it and hold it for the long term. I know we've talked about market timing in the past, but this is just another way to be looking at it through a different lens. Thanks for joining me for another episode of Data on Deck. I hope you guys enjoyed that. And I hope it helps you in your financial and investing lives. Don't forget to subscribe and like our page and shoot us any questions if you need to. We'll see you next time.